Good morning, everyone. It's Sue here from Scott Properties Group, and today I have Ian Robinson with me from Mortgage Choice on the Sunshine Coast. Hi, Ian.
Hi, Sue. How you going?
Oh, good, thank you. Good. Look, there's been so much confusion over what's going on regarding home builder grant, etc. So the idea of this morning is to just try and clarify a few points so people can be a little more understanding of what and where they fit in. I think that's the biggest issue that people are concerned about, and just making sure that people actually have, as I say, a better understanding of it. So I thought we'd start sort of from the top to the bottom of what's available for first homeowners, or buyers rather. And the first one, of course, is the Queensland First Home Owner Grant. So can you just clarify that for us, please, Ian?
Sure. So the First Homeowners Grant has been around for many, many years now. It's a $15,000 grant that is available to people who are first home buyers. That's if they're buying brand new, never been lived in, or if they're constructing a home. The First Homeowners Grant usually comes whilst you're constructing at slab stage. When the slab goes down, they get paid that grant then, or obviously buying something that's already there, you'll get that at settlement.
So it's actually wrapped up in the contract. The first, with the developer, is it's wrapped up in that scenario?
The First Homeowners Grant is a separate application form that's done. If people aren't applying for finance, they can still get the First Homeowners Grant. They just fill out an application form, send it off to the Office of State Revenue. If it's done through the lending process, then we'll do it at our end and submit it. So people can either take the money and add it to their deposit, or they can use the money for whatever they want.
Well, it's a very valuable grant, without question. It could be the difference between being able to do it and not being able to do it. So, I'm all for that. Then we move on to the First Home Concession. Now, that's always a little bit confusing for people, especially if they want to buy an established property.
Yes, so first home buyers who are buying up to the value of $750,000, $500,000 in the case of an established place, they'll get no stamp duty charged to them. Okay, so normal stamp duty on that, $5,000 or whatever it might be, that's waived and they get that for free. The same applies to vacant land in that up to $250,000 they're exempt from any stamp duty there as well, so it's a concession they receive on that. So $500 for houses, $250 for vacant land, basically.
Okay. And established properties, again, we know that, I'm right in saying that to get that, it has to be substantially renovated or completely rebuilt virtually to get that concession. Am I right in saying that?
No, the First Homeowners Concession on, if we go back one step to the First Homeowners Grant, you're correct. They can still get the grant for an established house, but it has to be a complete overhaul pretty much. Okay. We don't see many of them because people typically don't do that as first home buyers, but that's available. But when we go back to the concession, it can be for any home up to $500.
Okay.
As a first home buyer.
Okay. And then we've got the First Home Loan Deposit Scheme.
The First Home Loan Deposit Scheme is a new one by the government. They did that to kickstart the market again. So it is basically up to the value of $475,000. Normally, if people have a small deposit, like a 5% deposit or something, then they would have to pay something like in the vicinity of $11,000 to $13,000 worth of mortgage insurance. The First Home Loan Deposit Scheme means that the government will guarantee that mortgage insurance so that it no longer is payable by the borrower. So in the event where they have to move out of the house, then it becomes payable. So you have to live in the house for as long as you have that loan, basically.
Oh, okay. So what's the average loan period?
The average, people hold their loans for normally about 4.2 years is the normal. But if you take a loan over 30 years and you're happy to stay there, well, great. But the First Home Loan Deposit Scheme will only guarantee that property. When you move out, it's finished.
Okay. Okay.
So it's a great saving for first home buyers. There are only 10,000 that are made available every 6 months. The first one that came out. So the first one that came out in February was taken up very quickly. And a lot of people, you can apply for them beforehand and just hold it there as like a pre-approval. But a lot of those sort of fell off over COVID and people didn't proceed. So a couple of them are coming back on board now. But after July, there's going to be another lot that will be available, and I'm sure they'll go fairly quickly as well.
Yeah, that's a great opportunity. A great opportunity.
Great opportunity.
Yeah, and let's be frank about it. You know, first home buyers are so necessary. Otherwise, the whole system gets clogged up, and
Yep.
people need to be able to feel confident they can move forward, so to put their property on the market, because the stock levels are still very low. And I'm trying to say to people, you know, that are in property already, there are ways that, you know, especially if they're established properties, whereby first-time buyers can get in as well, and they need to look at that, because if they're not moving, if those first home buyers that bought, say, 5 years ago are not moving on, then it's really clogging up the works all the way through the process, right the way up to the high value properties, because, you know, it is a process, and people move on, move forward. So it's very important that this can happen, so that if nothing else, it will set a new pattern in a couple of years' time for people to improve their property or move on or whatever they want to do. So, you know, that's got to be a good thing. Now, the home builder grant.
So many grants.
I mean, we say with rolling eyes. There's so many takes on it, and, you know, there's really only one take, which is the truth. But there's an awful lot of speculation and misunderstanding. I mean, I've read it through quite a lot, obviously, because it's important, and I was very pleased to see that people can actually buy off-plan properties with it, which is good. But for the average man in the street that doesn't have somebody guiding them, it actually looks far more complicated, I think, than it actually really is. So can you just clarify it just a little bit for us?
Okay, so the new home builder grant is, the good news is it's not just for first home buyers, it's for anybody to make use of, as long as it's for owner occupier. So investors are out, poor old investors, miss out again, but that's okay. So it's a grant of $25,000. People don't have to panic. There's no cap on the number of people that can use it. It's going all the way through the end of the year. So there's no real hurry to get on board. You make application through the Office of State Revenue or through your broker. Forms aren't out yet, but they'll be coming out soon. So they're designed for people who are going to make use of the tradies. So that's the whole reason it was set up. So primarily for building and major renovations over and above 150 up to $750,000 for those people who are renovating. But back to the topic of first home buyers. So they can access, if they own land and they're going to build on their own land, they can do it if they're buying land and building. So it's a pretty valuable tool, and it can get added to the first homeowners grant as well. So that $25,000 then becomes $40,000, which is an absolute bonus for first home buyers.
That's huge. Huge.
Yeah. And even 25 for someone who's just buying and they're not a first home buyer is great.
So yeah, but as long as it's a new property, it's got to be a new build though, hasn't it?
It's got to be a new build, yeah. And to qualify for it, obviously you need to be an Aussie citizen. You need, as a single, to be earning no more than $125,000, and as a couple to be earning no more than $200,000. And I'll look at your last tax returns for those. You have to enter into a contract to build with a registered and licensed builder. So you can't build with Uncle Joe, who's a builder. It's got to be at arm's length, because obviously we're making sure that everything's above board.
Yeah, otherwise the system will get rorted. I mean, it's as you say, no, Uncle Bill can build this for us, and we can carry on. Yeah. So yeah, and look, that's understandable, and that, you know, the government have got to put in these kind of restrictions. Going back to the renovations, well, I think that's caused an awful lot of I don't know what the word is really. I think everybody, because it was publicised as 25,000 for renovators, the assumption was, before this came out, where the limits were, that it was actually going to be anyone who was renovating could, providing they had sufficient bills and they were qualified trades, etc., licensed trades, they could apply for 25 grand and they could get their new kitchen, new bathroom, new decks, whatever. And then when everyone saw that you had to do this 150,000 build or renovation and then get your 25,000 back, look, look, some people may do it, that's fine, but you've got to have a fairly high value property to do that, because otherwise the return on investment isn't going to be there. And regardless of what everyone believes or says, the understanding is that, last week they announced that we're in recession, which we are and we aren't, I think, is probably the answer to that in some ways. But to expect people who are not in that level of income to be able to even afford to go and get another 150,000 off of a property could take virtually all their equity away, and I can't see how lenders are going to lend anyway. So I know we weren't going to be talking about that, but I think it's a relevant point within this whole home builder grant scenario to mention about that. And I think the uptake's going to be very low, personally.
I think that the theory behind it is purely by way of stimulating employment within that industry. So it's unfortunate those people who are well-heeled can get it, and that's good luck to them. But the whole idea of spending 150 is to employ as many trades as you can. If you're doing a $25,000 bathroom renovation, it's going to be one guy doing it. You know what I mean? So I think the whole idea of 150 to 750 for a renovation idea, or up to 750 for a build for other people, is to get a group of people employed in the community.
But again, it's, of course, going to come an awful lot of people out. So but
yeah,
anyway,
of course, yeah.
That's how it is. On a more general note, how many days is it these days that finance is coming through? Because I hear, or we know, we have clients 45 days, and they're still, and the vendors are getting a bit, what's going to happen. But is that you're finding that as well, that it's being drawn out a bit more now?
With some of them, because they're all impacted by COVID. Everybody had to move out of the office and work from home. There was issues with that. A lot of the bigger banks, ANZ, St George, they had thousands and thousands of people in Bangalore and the Philippines, so they all had to be brought on shore. So some banks, for example Macquarie and a couple of others, they're all at one-day turnaround still, whereas ANZ are at 25 business days before they'll even pick up an application to look at it, and then it goes through its process. So that's a month. That's a month before you touch it.
Yeah, more stretched out to that 45 days, which is happening.
But they're slowly clawing that back. They're all working weekends. So if you've got a 14-day finance clause, provided we pick the right bank, we're cool. 21 is probably the norm nowadays we're seeing. But if
we always put 21. We put 21 because we know that that's probably more realistic. And we are having to push it out. And the majority of people understand it, that they get it, because they're probably doing the same process for their next property anyway. So they know where they sit as well and whatever. It just makes it very difficult when people are perhaps trying to move to by a certain date. It could be employment, it could be schools, it could be all manner of different things. So that's the only thing. It does make it a little bit harder. But I do think, and what we're finding is that it might go up to 45 days, but the settlement is then 7 days later. So in other words, it's a very quick settlement after it's all been approved. So that kind of catches up a little bit with it all. So on the whole, people are still coming to you, and
it's still there. Busy. So still busy. We're a little bit more focused on which banks we're going to use because of that time frame. Sometimes people might say, look, I want to use ANZ, and we have to say, well, you're going to be waiting 6 weeks, so we might have to change camp. But as long as people are flexible, and vendors, you're right, have been very nice about it throughout this COVID thing. Don't forget too, we're coming up, at the time this video goes out, we're probably coming up to the end of the tax year as well, so things are going to tighten up again with banks, so people just need to be a little bit flexible in their arrangements.
Oh, I think the whole thing for all of us is flexibility at the moment. We're all having to work around unknowns, really, in so many areas. But look, the industry is still out there. The building industry obviously needed this big hike because they reckon they were going to be 30,000 properties down this year. Hopefully that will increase. The only thing that concerns me from a construction point of view is it might be okay if you're going to go onto a large estate where there's lots of properties being due to be built. And so they already have kind of planning permission in place, and it's not an issue. Where I think it could hold back a bit is if you've got a piece of land, you've got to get the design done, you've got to get it submitted, you've got to get it through, then you've got to get the finance finalised. That's going to be a very tight for a 6 month But it has to be in construction. Does construction actually have to start within that 6 months, or is it as long as the contract's signed in 6 months?
No, you've got the contract to be signed between now and the end of the year, and construction has to start within 3 months of signing of the contract.
Yeah, that's what I thought. So look, it's doable. It's all doable. I think it's going to be slightly harder for those people that maybe have land that they're starting from scratch with, that want to benefit from it. But if you're going to go and buy something like on the coast in, say, Aura or Palm View, or it's already established, and there's lots of developers down there, then I think that process will be really quick, providing finance comes through okay. So one thing that's been interesting is, before we go, is about people who whose companies are on JobKeeper rather, and I heard last week from a real estate agent who has had a couple actually of her clients who have applied for their mortgages. They already have pre-approval, so they're just going through the process to purchase, but have been knocked back because their employers are getting JobKeeper. Is that very much categorized by the industry that you're in, rather than across the board?
Yeah, you'll find that banks are taking a pretty common sense approach on JobKeeper, in that they'll still consider people with loans who are on that program, because it's a program that the employers set up, so the employees really don't have a choice in that, so they get it. So 1 or 2 banks will ask the questions about the industry that they're in. If they're getting JobKeeper, if it's like a restaurant or something like that, then they will do a little bit of due diligence around whether or not that certain restaurant is going to return after COVID, just to make sure that will have a job. But normal run-to-mill, the work cover doesn't really affect things too much at all.
Which is good to hear. I mean, I'm assuming that these particular people may well have been in a perhaps a service industry that may not be able to guarantee that they're going to be able to continue their employment after JobKeeper potentially finishes in September, October. But I think there's also talk that it may be extended in a different kind of way for certain industries. We just don't know. That the government are going to be continuing to look at what's going on. To make sure that everything traction keeps going. I must say, we were out at the weekend and it was just so nice to see families back out there, people going to open homes. There's more of a sense of normality coming back, thank goodness, and let's just hope that we don't get the second wave, we don't get any spikes, and we can continue, and then our borders can open. And I think once the borders open, then all industries across the board will see a huge benefit from that. But look, we have to go with what we've got. We can't just say, and there's no point arguing about it. I mean, that's what it is. We might not agree with it, or we may, but what can you do? You just have to go with what the state is saying. So okay, Ian, well, that's great. Always appreciate your input. Thank you very much. And for those of you watching, we have done a 3-part series, and the first part is on first home buyers, and I've pulled back when I was going to release that because I wanted to speak to Ian first, and you may actually be watching this video as it's going to be attached to that document that's going to go onto social media. So that's the first part of this 3-part series that we're doing. The second part is looking at why people are not wanting to put their property on the market, and then the third part is all about investors. So it's quite a broad area. So I'm sure you'll read it all, won't you, Ian? You'll be on there reading it.
I'll be reading it.
Okay, everyone. Thank you for viewing with us, and we'll see you next time. Thanks, Ian. Bye now.
Yeah.